Ready to explore the latest trends in real estate? What are innovators in building planning for the future? The Ralph Bivens Project digs deep into the minds of key players in the industry and discussions with today's thought leaders. I'm Ralph Bivens. As a journalist who's covered the real estate and development industry for decades, I invite you to join me as we probe for new ideas and projects that will be making headlines soon. We love to ask hard questions to interesting people. When you've done over 100,000 interviews, you seem to get enlightening answers. Don't forget to download and review this podcast on Apple, Spotify, and wherever you get your audio inspiration. You can also watch and subscribe on YouTube or visit realtynewsreport.com. Welcome. This is Ralph Bivens at the Ralph Bivens Project. And first, I just wanted to ask everybody, does it seem like the cost of a hotel room now is kind of going through the roof? I mean, if you're traveling for business or pleasure, you think back at the hotel you used to go to and pay $150 a night, is now $250. And so that's a lot of things have happened, and the pandemic and everything. But we're here with a guy that knows a lot about it, Adam Lair, and he leads the hospitality investment division at Partners Capital, and he's managing director of the PCR Hospitality Fund number 1, which specializes in investing in hotels. And we're going to talk about that in a minute, but first we just kind of talk a little bit about what's going on with the hotel market in general. Everybody knows the pandemic was not good for the hotel business and a lot of other businesses, but a lot of hotels took it on the chin. Some of them couldn't make it, and don't blame them. But I was just looking at some stats this morning, Adam, about I think we had in 2023. These are kind of new statistics for what happened in the year last year. And in the Houston area, occupancy rate was about 60%, which is up about 6% over 2022. So that's pretty good. Rates are good. Tell us a little bit about what's going on in the hotel market lately.
Yeah, I think nationally, hotel performance surprised us in 2023. Coming out of the pandemic, hotels recovered pretty quickly. A lot of that was led by leisure. A lot of what we looked at in, call it coastal leisure markets, destination drive-to type markets, coastal Florida is one of the types of markets that spring to mind. A lot of those had a pretty significant pop from all the pent-up demand and international travel restrictions. And so there was an expectation that was going to come down pretty significantly in 2023. I think we saw some of that occupancy roll off at the end of the year, but rates held incredibly strong. And I think where we might have expected to see RevPAR soften pretty significantly on the back half of the year, it really didn't nationally. I think some of those markets did correct, and we've seen that, and it's hard to get your arms around those kinds of markets. Certainly that's not the type of dynamic that Houston's in, but it's hard to get your arms around those types of markets. But nationally, I mean, we were surprised to the upside by how well hotel performance held.
That was good. I mean, here in Houston, we had some pretty good reports. I was downtown Houston occupancy was up 10% last year. That's tremendous. That's tremendous. You would think with all this, back to the work thing and people working from home and all that remote working, that the downtown hotel market it is tough, but still to make a 10% improvement was pretty good. And we've got at least two properties one's brand new, the Moxie on Main Street. It's a boutique, lower Main Street. Is about 100 rooms, something like that. And then I think they're constructing a tower, a 17-story tower that's I think it's Homewood Suites and maybe Holiday Inn Express in a single tower. So there's a lot of upside in the downtown market, I think, and potential.
Yeah, I haven't seen that Moxie yet. I've heard a lot about it. I know the architects of that property, so I've kind of followed it. It looks like a great hotel. Houston it's one of those markets where I think the story is bigger than COVID. It's recovering still from 2014 and still trying to catch up with where it would have been in 2024 had that not happened. And so you kind of layer in COVID, and there's a lot of runway in a market like this, and you're starting to see that. And so I think it's one of those where the past 6 months, as we've been kind of digging for deals, you've seen a lot of investors key in on Houston and a lot of stuff come onto the market, certainly.
That'd be good. And there's always I believe it's a done deal for an expansion of the convention center, which that would help, all markets of Houston, I think, if that big expansion comes through and we're able to bring in some bigger league conferences, conventions, things like that. That could be pretty positive.
Yeah, I think from a hotel perspective, I mean, a market like Houston kind of typifies what you see in other markets. Like I think of a San Francisco with the difficulties that they're having office wise, and especially with downtown. And I used to live in San Francisco, so I identify with that. Houston is one of those markets where you kind of have to pick and choose your spots from an investment perspective. I think what the market has craved, like a San Francisco, is certainty. But where you can find that, the upside is pretty dramatic, where you can find kind of diverse demand generators and a little bit of diversification away from energy, with that still comprising the majority of your demand. And if you can find those spots, you can really make a pretty good return in Houston. And I think investors see that.
And you've got kind of a national perspective. I believe you were, the HVS hotel consulting firm for a number of years and covered a lot of markets. So I think you've got a pretty broad background, and then you've came here to Houston to work with the Partners Capital, or the Partners Real Estate Group, directed by John Silverman, a pretty well-known name here. And so that I believe you guys had closed a property this real recently there in San Marcos, Texas, against south of Austin, if I'm not mistaken.
We did, yeah. We bought the Hilton Garden Inn in San Marcos last week now. So it's been about a week since we've transitioned it. We love it. We love that market. That I-35 corridor is, I don't think I have to explain what that area means to the triangle to anybody in Houston. So we're really excited about it. We're excited about the growth potential. We see an opportunity, I think, I would say a 10-year opportunity in extended stay and select service hotels. I mean, the model for those types of investments has a ton of upside for us, and we can get into more why that is. But we just really love that product, and we love premium branded select serve and extended stay, Hilton and Marriott specifically. So if we can find an asset like that in a market like San Marcos, I mean, it's a win all around for us.
Right, and then you're basically kind of focusing on Sunbelt just areas, correct?
We're focused on the Sun Belt. I mean, look, it's driven by a couple of things. It's driven by the fact that we're in Texas, and I think that location, when you own hotels, still matters. I think the ability to not only get to your property, to be able to be hands-on if you need to be, and we're not necessarily an operator, we're an owner, but there are things that we need to be on site for and be able to touch the hotel for. So being centrally located in the Sun Belt is important, but beyond that, I think the fundamentals in the Southeast and the Southwest are just shifting dramatically compared to other areas of the country that you say. I mean, there was a Bloomberg article, I want to say it was in the fall, about $100 billion wealth transfer from the Northeast and the West Coast to the Southeast. And I mean, I'm from the Southeast. Everybody in Houston is familiar with this region and the growth that it's had over the past, say, 20 years. And I think that is only snowballing. You're reaching critical mass in that. And markets like Austin, Nashville, Charleston to some extent, Miami, certainly. I mean, these markets are much more attractive these days to investors like us than the LAs and San Franciscos and New Yorks of the world.
I read, somewhere that there's kind of a blending going on between the. Well, first, let me do a pop quiz. Okay, let me do a pop quiz.
You didn't warn me about this.
I didn't warn you. There's no warning. This is I'm sure you can handle it. But they were talking about the blending of what used to be called extended stay hotels and what they call select service. A lot of people, not connecting with what exactly those segments are of the hotel business, but and they said that if you count new brands that are about to emerge and come onto the market and the existing ones of those two segments, there's 200 hotel brands in select service and the extended stay. So can you recite the 200 off the top of your head?
I can. I just failed this pop quiz. No, it's I think brand proliferation has been an issue in this industry for as long as I've been around. I've been in the hotel industry for 15 years, so I'm still a baby to some people. But as long as I've been around, I remember seeing charts over a decade ago. Marriott would put together matrices of where each brand fell in terms of lifestyle and who they targeted and whether it was leisure or business or group and how that all worked. And the overlap was just, I mean, there were brands on top of each other and right next to each other, and you couldn't make heads or tails of it. So I think when we look at brands in terms of what we want to pursue, and certainly we like all of Hilton and Marriott, right? But when we look at those brands, what we're really looking for is brands that have a good guest recognition and a good identity with guests. So for instance, you mentioned Moxie. I think that's a brand that is still trying to find its way in the world. It certainly has a niche. If anybody listening to this has ever stayed at a Moxie, it's a sort of micro room concept. They're usually city center. I think it's got a niche that it's trying to pursue, but it's still gaining traction among guests. When we look at a Hampton Inn or a Hilton Garden Inn like we just bought, or Residence Inn, Courtyard by Marriott, those things, for people like us that travel, I think those are known quantities. And so when we think about attracting guests to our properties and then in the end, exiting and selling them to somebody else, I think those types of brands are far and away more attractive than the ones that are still kind of struggling to gain that traction or still have a little bit of a road to hoe in that regard. So it's kind of tale of two worlds in that brand space. I think you've got the ones that have staked out their territory, and the ones that are kind of still trying to feel out what that is and elbow out the other competitors that are trying to get it.
You got so many new, like
there's
a Home 2 Suite and Homewood Suites and Hyatt, I guess, has was it Hyatt House and something something else. They've got and just tons of these brands that. But I guess what we're talking about here is. They're putting some more amenities in there, like I think you'd see. I guess you always see a free breakfast, probably in a select service product.
Usually, you charge for breakfast depending on where you fall on that select service spectrum. Typically, if you're a Hampton Inn, that type of Holiday Inn Express, you'd get a free breakfast. Your Hilton Garden Inn, like us, I think there's some flexibility there. Traditionally, you would be expected to charge for that breakfast. They've allowed buffet type breakfast and things like that. But again, I mean, there's blurring across all of these lines these days. It's not as clear cut as it used to be.
But I think the other issue is, you know, the a lot of these hotels have started uh, doing kitchenettes and
Mhm.
things like that kind of bringing in some of that extended stay stuff into you know, into what was a select service now has kitchenette, and more and more that is happening. I've been told.
That's accurate. I think that what that reflects is that the brands are recognizing, or the brand families at least, are recognizing that there's a, call it, and I actually heard somebody call it this recently, a generational opportunity in extended stay. I mean, the root of that is during COVID, extended stay was far and away the best performing segment in the hotel space. And so you can kind of look at that on its face and say, okay, well, there's a shift in guest preference toward extended stay. But if you dig a little deeper and you ask yourself, why is that? It's a few things, right? I mean, we accelerated a shift away from office and city center type work. And so now what you've got driving, and this is a, you know, this is a whole nother, this is a whole nother trend nationally in the way that we operate as a macro economy. But what you've got driving our corporate demand is a lot of distribution and trucking and construction work, infrastructure work. You've got a lot of medical, right? Traveling nurses, traveling doctors, things like that, things that didn't go away during the pandemic when everybody was at home shopping online, buying stuff from Amazon, going to hospitals, going to doctors, things like that. And so you've seen a shift toward those things. And then you add on the fact that brands have sort of identified that leisure travelers, that families like staying at these extended stay hotels when they weren't initially designed for that, and love having a place that they can cook meals and have essentially an apartment for a week, right? So you kind of add all of those things together, and it's a great sort of diversified, recession resistant segment to be in that's seen a ton of growth over the past 10 years. And I think you're seeing the brands come into that space in reflecting that.
Right. Well, it makes sense if you, a lot of people now, if you can, you know, work outside the office and you know, got a laptop and maybe you can, it might be good to have a desk in there, or you can work at a desk while you're doing, you know, podcast or, you know, Zoom calls or whatever, and things like that. But you could go anywhere, you know, and if as long as you get the work done, you could be working
Right.
anywhere. And I think that really fit these people. And if they can, if they have a, you know, little refrigerator or something, you know, be there for a week, that helps them. And so it makes sense that these are turn out to be really, really strong. But I just, but that's what they were saying. Hey, it's the blended. There's now this. There's not that much of a difference in a lot of ways between what was called extended stay, well, extended stay suites with everything, and where people are going to be working in a city for, you know, all week, you know, or whatever, or even longer. And these formerly select service swap properties. But you've seen a lot of pretty smart investors like, you know, John Goff at Crescent Real Estate in Fort Worth. He's a pretty sharp guy. He's
Yeah.
making, and he's buying, his firm is buying a select service pretty significantly right now. Also,
Yeah, it's a, you know, it's an attractive space for investors, not just us, and investors all over the place. I mean, I know Mit Patel and Noble just raised $1 billion fund to go after select serve and extended stay. I think that what you've seen is you've started sort of seeing boutique and soft branded type stuff and luxury differentiate itself away from this space. And like you're saying, the point that you're making, these hotels have kind of gone the opposite way and sort of melted together. But it's a very defined space as a whole right now, and it's got an attractive, you know, it's got an attractive target market and the ability to kind of hold that guest long term and attract more guests to it. So we're not alone in pursuing those types of hotels for sure.
Yeah. That's yeah. I think the quote is that hey, this is the highest level it's ever been. The investment activity in this segment is the highest it's ever been, and I believe I'm told that the select service hotels are now way up there in terms of their return on investment and the profits thereof. Right, we've got industrial warehouses used to be the big deal, like real recently, but and of course office, retail, apartments, but number one, um, leading them all is what's happening in the niche that you specialize in.
Yeah, I think, look, the case for hotel investment is pretty compelling, especially right now, right? I mean, you get the highest returns of any asset class in commercial real estate, and traditionally there's a reason for that, right? They're operating businesses in addition to being real estate. But I think the interesting thing about this select service and extended stay space is it sort of takes a lot of that operating business risk out, right? It strips away a lot of the execution risk that you might have with a luxury hotel or a boutique property that's in a downtown market. These are consistent box type products that are really supported well by the brands. You have relatively low overhead. The margins are high. They're easy to predict if you have a good operator in place. So the model is you can really, and I think what we try to do at Partners is really make these things as much of a pure real estate play as you possibly can. And so you still get sort of the high returns that you see in the hotel space, but you've eliminated a lot of the risk that comes along with having that operating business. And so your risk adjusted return is significantly higher than I think you see in the asset classes you just mentioned, for sure.
Do you have like a management company that you're dealing with, you plan to deal with, or?
We do. So we partnered with one of the large national operators on San Marcos, and we've had a great experience with them, and we'll continue to do that. I think what's important for us at Partners, and what we've done really well, is be smart about the way that we invest in the properties that we invest in. Be disciplined in our strategy so that even though we kind of start small with these platforms and build them up, we can operate like akin to a much larger institutional investor. So we know where our capabilities lie, and they're not in hotel operations, but we know who is excellent at that. And there are a lot of groups that are, and we'll partner with those groups and bring them in. And just like I said, this one we really like, we've had a great experience with.
I want to go back for a second to what you mentioned a minute ago about your interest in the San Antonio Austin corridor, which that's Henry Cisneros, when he was mayor of San Antonio back in the early '80s. He was talking that and a lot, and kind of, and now here we are. It's going in full force. So tell me a little bit more about what you're thinking and what you're looking for in the San Antonio Austin corridor.
Yeah, I think I'll pull back that aperture a little bit and talk about generally how we view markets. I think when I think about investment in hotels for us, it's sort of a three-legged stool, and the most important of those is what the market is, right? We're really concerned as a fund-based platform with how we exit in the end. A lot of our returns that we promise to our investors, those are dictated by how well we exit to another buyer. And I think what we don't want to do is limit that buyer pool on the exit. And the two easiest ways to do that is pick the wrong market or pick the wrong brand, right? And right off the bat, you've stripped away a lot of your potential buyers. So what we look for and where we think the opportunity is in the Sun Belt, maybe we're a little bit different than some other groups in that regard, is secondary markets with diverse demand generators, like we talked about, where you've got some downside protection, which we're really big on, but you can kind of see the path of development and the growth. So we love the outskirts of growing primary markets or large secondary markets in the Sun Belt. And I think when you kind of look at Austin and San Antonio, Austin being one of the hottest markets of the last 10 years in hotels and certainly in other spaces, and then San Antonio now kind of coming on the main stage for the hotel space, and you kind of look at the trend of growth toward each other from those two markets. I mean, being between them in any area is a no-brainer for us, I think.
Right. And then I guess that would include a lot of things, like you also mentioned the Texas Triangle,
Yep.
Dallas, Houston, San Antonio, Austin, which, Cisneros written a book about the triangle too. But that he's thought a lot about these concepts. But yeah, so really you would be pretty highly interested in the Texas Triangle.
We love the Texas Triangle. I mean, when we look at the Sun Belt, it sort of sounds like a catch-all and a grab bag of, hey, we're looking for everything from, inland California or Arizona, call it, to the Carolinas. But the reality is we're looking at probably 5 areas of the Sun Belt, and the Triangle is first and foremost. Probably, I would say it's the best of those from a fundamentals perspective, right? You look at kind of that Carolinas region that's doing really well. Central Florida is doing really well. That stretch from Nashville to Atlanta is really hot, but I don't think anything really matches what the Texas Triangle has done and the people and businesses that it's pulling in the past 5 or 10 years.
Now I know that you demonstrated interest in Hilton products, hotels, and you mentioned Marriott. What about IHG?
Yep.
Hyatt? Would you look at a Hyatt or an IHG also?
We would look at both of those. We like certain brands in both of those families. I think at the end of the day, Marriott and Hilton are the two biggest brand families by room count. They're the best known. They're the most attractive to investors. They're the most attractive, I think, to guests, and they're the most known commodity. But I think depending on what brand it is and what market you're in, IHG and Hyatt have some pretty strong options. We love a Holiday Inn Express in certain markets. Yeah. I think they play really, really well. And IHG has done a really good job of bringing in some sort of diverse limited service options that are, again, I would go back to our discussion about brand proliferation. Yeah. They're still trying to find traction in some of those spaces, but I think they have an opportunity to do really well with some of the stuff that they've done. I'm thinking about like Even and Avid and the Garner brand that they just came out with. Yeah, man. It's every day. Every day. It's a new one every day. But they've got some opportunities there, and I would say Hyatt's very similar. I like Hyatt House a lot in the extended stay space if it's in the right market. So we would consider those certainly.
Yeah. Well, let's just a bigger picture question is just kind of we're going forward here, still in the first quarter of 24, but just the hotel market in general, what do you see happening out there and in the U.S. with hotels?
Yeah, I think, well, I'll give you 2 answers to that. The way that we look at it, we're very conservative in the way that we underwrite things. So I think if we're not underwriting some sort of macroeconomic slowdown and some sort of either flattening or pullback in RevPARs, I don't think we're doing our investors a service. So that's how we modeled San Marcos. That's how we'll model everything until we have certainty this year, I think. But, as the macro economy goes, hotels go. I mean, I think you saw it during COVID and the financial crisis too. I went through the financial crisis in this industry. I think you see that when you get to the precipice of those things and there's not a clear path to recovering and getting back to normal, it always does. The American economy is undefeated. So I think hotels have gone the same way. They've gone up and right over the long term, and they'll continue to do that. So if we skirt a recession this year or we have a soft landing, I think you'll continue to see RevPAR growth. Probably not at the clip you've seen in the last couple of years, but still at a pretty healthy clip, I think.
And the rate cut, if the Fed does do a rate cut, what impact will that have on the hospitality industry?
Well, I think it'll be significant from an investment perspective, right? We're in a period right now where the hotel investment market is pretty dislocated. And what I mean by that in a basic sense is it used to be that performance, or rather, let's call it interest from buyers and pricing, was tied directly to performance. I don't think that's the case anymore. We've seen continued strong performance through the most recent data, and we don't have a lot of buyer interest in this market because of interest rates. Pricing is not quite certain. I think there's still price discovery going on in a lot of asset classes. Maybe it's a little bit firmer in select serve and extended stay that we're looking at, but we're still trying to find it in a lot of areas. So, and that's because of the speed of interest rate increases. I think you could kind of count on where the cost of capital was previously, and now there's just not that certainty. I think as you get more certainty over the course of the year, if the Fed starts to lower interest rates in the back half of this year, I think you'll see more people that are sitting on the sidelines jump into the space. So we feel like from our perspective as investors, we feel like we've got a window here where the market's dislocated and we have conviction that performance is going to continue to be strong, at least medium term, if not this year. And we want to jump in pretty aggressively into the space and strike while the iron's hot before everyone kind of floods in and bids up pricing.
I guess you probably have another property or two under contract to acquire right now.
We're in talks right now. We have some that we like very much in the markets that we just mentioned.
Would care to give us any more hints?
We're looking very hard at a few in Florida right now. We love Florida. I think, we pursued pretty aggressively some things in Central Florida last year before we got San Marcos, and anyone who knows that market and hotels specifically in that market, insurance is a nightmare out there.
Oh yeah.
And that put us off pretty handily from Florida for a while. But I think we've gotten some comfort there, and we've gotten our arms around it. I think what has helped too is sellers have really started to come around and understand what buyers are facing in some regard. And that's a national trend, but I think in Florida it's been more so. So we're able to come a little bit closer on the bid ask in that market, in that region, and we like some stuff there.
That the insurance in Florida is it's an issue that I need to get a handle on and get it fixed somehow. It's their growth trajectory is straight up, and they've been doing great, but that's an issue.
It is. I mean, there's, that's a place where you have to get your head around a lot of things that pop from 21 and 22, the insurance. But if you can connect on something, there's a ton of runway in that market. And I would add, we're still digging really hard in the triangle. I mean, we'd love to find more in this region. We think there's a ton of opportunity here. So we'll keep digging.
Yeah. Okay. All righty. Adam Lair, Partners Capital Hospitality Fund, and he's appreciate you spending time to talk with us and talk about this interesting market that is offering a lot of yield and to a lot of people. So keep in touch, but thanks for being here today, and we'll talk again soon.
Ralph, it's been my pleasure. Thanks for having me.
Okay, my friend. Thank you.
Take care.